Welcome back to today's Explainer. We are looking at an absolute clash of the titans in the crypto markets for August 5th, 2026. Think of it almost like a high-stakes anime battle playing out in real time right in front of us, complete with these incredibly vibrant contrasting forces. On one side, we've got rock-solid fundamentals and heavy institutional backing swinging hard. On the other side, a pervasive, undeniable sense of retail panic. We're going to break down exactly why this market is fracturing right now and what it all means for the days ahead.
Okay, let's jump right in. Bitcoin is holding the line today like an absolute champion. Seriously, despite all the turbulence we've seen this month, it successfully defended its critical support levels. We're talking a solid 1% gain over the last 24 hours, hovering right around $64,037, with peaks pushing up to $64,360. It's kind of incredible to watch. Every single time the bears tried to drag it below that 62,000 to 63,000 range, boom, buyers stepped right back in. In a vacuum, this kind of resilience from the undisputed heavyweight of digital assets paints a picture of a really healthy, stabilizing market.
But here is where things get super interesting. Despite Bitcoin's stellar defense, the broader market sentiment is flashing this deep comic book crimson. We are stuck firmly in the fear zone. The Crypto Fear and Greed Index is hovering between 27 and 38 today. So, we aren't exactly in the extreme doom and gloom depths of panic, but there's this heavy, palpable anxiety just hanging over the trading floor. Traders are on edge, and that caution is totally dictating how capital is moving around.
So, that brings us to a massive central contradiction. If Bitcoin is defending its territory so incredibly well, why on earth are retail traders so terrified? Why is our sentiment gauge stuck on fear while the actual price remains elevated? Well, to figure out this disconnect, we can't just stare at the price charts. We have to zoom way out and look at the huge external forces, the underlying mechanics that are actively driving this market.
Section 1. The macro battle, external forces. Crypto obviously doesn't exist in a vacuum, and today, global events are essentially rewriting the rules of engagement.
It is a true versus matchup on the global stage right now. In the bullish corner, market optimism is getting a massive boost from reports of progress in US-Iran peace talks, plus a potential deal to reopen the Strait of Hormuz. That's easing a lot of global geopolitical tension. But battling right back against that optimism is the regulatory reality over in the US. Expectations for the highly anticipated Clarity Act have seriously dimmed. Prediction market odds of it passing in 2026 have plummeted to somewhere between 13 and 25%. So you've got geopolitical relief trying to push prices up, while regulatory headwinds are threatening to drag them right back down.
Now, while retail traders are out there biting their nails, institutions are actively, aggressively buying the dip. Get this, Bitcoin ETFs are on track for their absolute best week since back in May, with inflows topping $381 million. That is a massive influx of capital, and it's giving the market a much-needed critical floor. It perfectly explains why Bitcoin isn't crashing despite all that overarching fear we just talked about. The big players are quietly accumulating, providing the liquidity needed to keep Bitcoin afloat well above its key support zones.
And if you want a perfect illustration of corporate conviction in this exact environment, look no further than SpaceX. They are maintaining a diamond-handed hodl stance on their massive Bitcoin treasury, even after reporting a $540 million paper loss. Now, because of fair value accounting rules, they actually have to report that dip on paper, but the reality, they haven't indicated any actual selling. This kind of corporate conviction, especially combined with recent legal developments like the denial of Sam Bankman-Fried's appeal, reinforces a major market shift. We are in an environment laser-focused on long-term compliance and holding, completely ignoring short-term volatility and speculative vaporware.
This underlying institutional strength actually caught the bears totally off guard today. We saw short-term volatility trigger a heavy squeeze, essentially wiping out $35 million in over-leveraged short positions in one single brutal combo move. But honestly, the bigger institutional picture is what really matters here. Wall Street is deepening its commitment to tokenization, with on-chain real-world assets surging past an incredible $32 billion. The sheer weight of that traditional finance money is pouring an unshakable concrete foundation right under the market.
Section 2. Altcoins, the divergence battle. Let's pivot and see how this dynamic is playing out in the altcoin arena, because the market is completely fracturing into distinct winners and losers.
We have officially entered a highly selective environment. Tokens are no longer moving in perfect lockstep like they used to.
In the past, if Bitcoin held steady, the whole market just kind of floated up together. Yeah, not anymore. Today, we're seeing massive gainers, like Cysic, which was a massive outlier, soaring an incredible 93% in just 24 hours, sitting right alongside catastrophic double-digit losers. The market is brutally filtering out the weak and rewarding the strong, strictly on a case-by-case basis.
A massive reason for this selective behavior is that we're in a fragile environment that is absolutely terrified of supply shocks. And that fear is perfectly highlighted by today's massive cliff unlock of over 312 million proved tokens hitting the open market. Just to put that into perspective, that is over 31% of Cysic maximum supply suddenly becoming available all at once. When the market is already this fearful, an influx of new tokens like that puts immense downward pressure on prices, and it can really drag down sentiment for similar mid-cap infrastructure tokens if buyer demand doesn't immediately step up to absorb it all.
Section 3. Winners, fundamentals power up. So how exactly do you win in a market that's dominated by fear and just itching to dump on weak news? You shift away from blind speculation and straight into tangible value.
Take our winners today, Pump and Zcash. They didn't rely on empty hype. They surged because of actual, real-world product updates. Pump.fund jumped between 10 and 13% just by launching zero-fee USDC trading across major chains like Solana and Ethereum. Meanwhile, Zcash saw a nice 6% rise after reporting that 1 million tokens successfully moved into its Ironwood shielded pool, massively enhancing their network privacy. These aren't just empty roadmap promises. These are tangible utilities actually being shipped to users, and the market is rewarding them handsomely for it.
Section 4. Losers, the beat drop. On the flip side of that coin, we've got the tokens that fell victim to the market's overarching fear and some really aggressive profit-taking.
Take Audiera, for example, trading under the ticker BEAT. It plunged nearly 20% today. It's serving as a really harsh warning that a weak social mood and aggressive profit-taking can instantly erase your gains if you don't have sustained, long-term utility to anchor your investors. It doesn't matter if you're burning tokens. When fear takes over and the broader market is flat, traders are going to cash out at the absolute first sign of weakness.
And honestly, that defines the exact environment we're in right now. A highly selective, stock pickers crypto market. The days of just throwing a dart at a board and watching your portfolio go up, yeah, those are on pause. Broad trends are flattening out. Right now, blind speculation gets brutally punished. It's real product launches, clear utility, and supply unlocks that dictate the winners. You have to actually pop the hood on these projects to see who is really building and who is just trying to ride the wave.
So, as we wrap up this explainer, I want to leave you with this question to chew on. How are you going to navigate your own strategy when the bears and bulls are fighting it out token by token? The data is showing us that the floor is strong, backed by massive ETF inflows and deep institutional pockets. But the ceiling for individual coins, that is entirely dependent on what they actually bring to the table. In a market this fractured, you've got to decide if you're going to let fear dictate your moves, or if you're going to dig into the fundamentals and find the projects that are truly powering up. Thanks for joining me on this deep dive, and I'll catch you in the next one.